how to use the tax tables to calculate income tax. Once we have found the taxable income, there are two main ways to use to determine how much income tax we need to pay. The first way is very easy. The IRS will provide for you income tax tables. An income tax table is just as it says. It is a table of income. So as you have rows and columns, and each chart is based on what your filing status is. So you find the chart for your filing status, and then on that chart, you go down the row to find out the amount of money that equals the taxable income, and then you go across to the column that represents the number of exemptions that you have. So this is what we would use. Now we're going to take a look in a moment at table 20-1 so we can see how to find this. But right now, let's see here now. The method that we need to use is locate the taxable income under the column headed. If line 43's taxable income is, all right, now this is of course language that you will see on the 2010 return. It will be different. The line number will be different in your current return for the current year. So just know that. And then once you locate that, then you move across to the column headed and UR, which has the 4 filing status: single, married, married, filing separate, married jointly, and then head of household. So 4 different columns. All right. And then the tax owed appears under the appropriate category. So on that chart, you will see all of those information, all that piece of information there, and then you go down and you find that. Let's look at an example so that this can become clearer for us. In our example, we are asked to find the tax owed by a married taxpayer who is filing separately. That's his status. His taxable income is $39,478. And then we're going to compare that with if he is filing jointly on the same amount of taxable income, so that we can see that these tax rates are different depending on your status. Okay, first you're going to locate the income range in which $39,478 falls. Notice that the column says is at least but less than. It's important that you take note of that because it will slightly change the actual amount of tax that you should pay. And you want to make sure that it is the correct column for you, or the correct row for you. You don't want to pay more, and you definitely don't want to pay less. Either way, you want to be correct, okay? Once you find that, then you locate the tax in the column to the right headed married, filing separately, and we will see that the tax is $6,056. So let's go over to this table and see whether we can find out these numbers. Firstly, we see that it's going to be $6,056 for the married filing separately. And if they were married filing jointly, we can see that that amount is actually $5,086. Let's take a quick look at this table. Table 21. We're trying to find the row that tells us at least but less than $39,478. So we will keep going through the chart until we find the row that matches what we're looking for. 39,000. Okay, here we go, up on this column here. So at least but not more than 39,478. It is not this row here. It's not this row, but it is the second row. Okay, notice here, 39,478 falls on this row here. Okay, so if we notice what the columns are, the first column here Well, because this is the chart for married filing separate or married, and and then we will find that this person will have to pay 6,056, and that's where we got the tax number for married filing separately. If the same person is married filing jointly, we can see the tax is $5,086. So simply using the tax table, if we know what the taxable income is, we simply go to this table, we find the amounts as we just did, and this is the amount that we will take and put on our income tax return in the appropriate line that says tax on this amount. Okay? Okay. So once again, you can see here, this table married filing jointly, married filing separately, head of household, just making sure we went back and we got the right columns. First column, single, married, jointly, married separately. So we use those numbers. These, yeah. Actually, incidentally, in this case here, if you take a quick notice about this, the first column, I was incorrect in choosing the first column. That is the column, if you were a single status filer and you had this amount of income, you would be paying in this year $6,056, which is the exact same amount as a person who had been married filing separately. They would treat you at the highest tax bracket if you were married filing separately. But if you was married filing jointly, and together you and your wife or your spouse earned this amount of income, then your total tax would be 5,094. So you can see, you want to really think twice about how you're going to file your returns, because depending upon the amount of income you're having, it might make sense to file one way or the other. And also depends on your tax structure. Some individuals have a different tax situation where it will be to their advantage to file separately. And in some cases, it's to their advantage to file jointly. You must make the comparison so that you can know for yourself whether you are choosing the correct way to minimize the amount of taxes that you'll be paying. And so that is the end of example 2. So we can see that using the tax tables, we can easily go to those tax tables with our taxable income and quickly find the amount of tax that we should have paid for the year on that amount of income. Now, on your W-2 return, a W-2 form, this is very important because this number is the federal income tax amount. This is the amount of federal income tax that you should have paid on the year. So in your W-2 form, on the box that says federal income tax withheld, you want to make sure that this amount that's in that box is compared with the amount that you got from the table. All right, so what happens in general, if you have not had enough money withheld from your income throughout the year, then at the end of the year now, you will have to make up the difference. It will be the tax due. They will take the amount from the table. They will take the amount from the table in example 1, example 2, part A. They will take this amount, and from this amount, they will subtract the amount of money that you had withheld from your income during the year from your employer. The difference would be tax due. But if your employer, the amount withheld, is in excess of this amount, then the difference then would be refunded to you from the IRS as you file your tax return. So after you file your tax return, they will send you a check or deposit into your account the amount of the difference, which would be you overpaid, and they will refund that to you. Now, incidentally now, That amount that you overpaid is given to you dollar for dollar with no interest. Your employer withheld this money throughout the year and was sending it into the government. The government was having this money and they could have used it to invest it and earn interest. But they will not give you interest on the amount that you overpaid. That's just a little side note that you need to pay attention to. Let's move forward. So, moving forward, make sure you take a look at these stop and check problems. 1, 2, 3, and 4. It is important, once again, that you get some exercise working through these problems, going through the tables. It's not very difficult. These numbers here are all already worked out for you. These are taxable income numbers, but what you need to make sure, the filing status. So you go down the proper column, in the proper row, at least but not more than these amounts, and then you extract a number. Go ahead and do that, and then we'll move on to the next part. Okay, the last part of this discussion is how do we use the tax computation worksheet to calculate income tax? What is the tax computation worksheet? Well, the tax computation worksheet is a worksheet the IRS provides for you in their booklet of information for individuals who have earned more money than what's on those tables. That means if your taxable income is in excess of $100,000, then you must use the tax computation worksheet to calculate your income tax, because there's no row or column that you can use from the tax tables. And so this worksheet here then is set up in a way that helps you to determine how to calculate your income tax. So let's take a quick look at this. Now again, this is 2009 return. It's different for the current year, but it is exactly the same principle, even though the limits and the levels may change, but the procedure is the same. Let's take a quick look at what this is doing. Section A is if you are a single person. Section B is if your filing status was married, filing jointly, or you were what's called a qualifying widower. You can qualify as a widower if your spouse died during the year. During the tax year, your spouse died. So for that year, you were both working and living together and having income together. And therefore, you can then take for this tax year that your spouse died, you can file as a qualifying widower. But in the tax instructions, they will give you some guidelines to make sure that you know whether or not you qualify to take this status. We know that this status, as we saw in the previous example, a married filing joint is a lower tax bracket compared to a single or a married filing separate. And so you're going to have to make sure that you can qualify for this status. But if you do, you can use Section B. Section C is if you're going to use, if you're married filing separately, then you have to use this. And then finally, if you're head of household, you use Section D. Let's go back up and look at some of these sections. Section A, if you're single and you at least earn $100,000, but not over $171,550, you use the first row and you enter your information. So in column A, you enter the amount from line 43, your taxable income. Whatever that amount is, you enter it in this row, and then you multiply that times 28%. So that means if you were single in the year 2009, when you're filing this particular tax return, and you your taxable income was between $100,000 and $171,550, then you would be charged a 28% tax rate. Okay? So what you're doing is you're going to multiply your income times the 28%, and it's going to give you this amount. From that amount, you're going to subtract this amount here. Okay? This is sort of acting almost like your standard deduction or whatever. Then from there, you put that column, in the next column, you're going to subtract whatever this value here from what you got in the column C, and that will be the amount that you use as your tax. So this is how you use this tax computation worksheet. Now, if you notice, it's simply the rows just show you the different ranges of income that you will be charged a certain tax rate. In this case, for the single, if you're earning at least $171,550, but not over $372,950, then you would be charged a 33% tax. And then anything over that $372,950, then you would be charged a flat 35% on income that you've earned, because you've earned in excess of the $372,950. So your total amount of, of taxable income would be entered in column A. You'd multiply that times the 35%. That would give you that amount there, from which you would be subtracting this 22,000, and you'll be resulting at a number in this column that would be the amount of tax that you should have paid on the income that you've earned. And this amount you would go and enter it on the line, in this case, line 44 on your tax return. Now, Form 1040 is the tax return form that we would use to be filing our income tax. We didn't talk about that earlier, but we're working on how to file your income tax. It is Form 1040. So most Americans know the 1040 form. We know that. That's your form you have to fill out. And there's several versions. One is a 1040 EZ form, which is if you don't really have itemized deductions and you just basically have income and not many other things. You don't have a house and other different types of situations where the government has all of the different tax code that you have to file. Use Form 1040, the short form, easy, or the long form if you have itemized deductions and other types of business incomes and expenses and other types of things. You need to use the long form to do that. Okay,